Traders, good morning, everyone, and welcome to this live trading webinar. How are you guys doing today? I hope everyone is having a great time so far. As we know that tomorrow, in many major banks, they're going to be closed due to the Catholic Easter. So not much of liquidity, I would say, in the market, and it's something, especially for new traders, you guys have to understand that the retail trade we do here, not necessarily here at Admirals, but in general as retail traders, what we need is to trade when the market, while the market it's on the go, when there is high liquidity, and of course when it's high volatility. If we are swing traders, it helps us a lot. So remember, if you're going to trade tomorrow, that very useful piece of information. As usual, just to make sure that everyone understands that this content is for general information only and is not intended to provide any trading or investment advice or any personal recommendation. Guys, just to make sure everyone can see me clearly, I can listen clearly. Good morning, Theo. Good morning, everyone. Hello, Larry, Rumen. And to everyone else that usually they don't say anything on the using the text box. So weekly fundamental analysis in the format of podcast. You can engage yourself, as I always mention, with that one. Hi, Mladen. Welcome. Let's share the other screen now. Guys, any trades you currently hold, please let me know. Next, the economic calendar, as usual. We would like to know what the major news events for the day. And here we have early this morning, Australian trade balance expected was from 11.26 billion to drop to 11.1 billion, but surprisingly, it rose much higher by almost 2.5 billion. So that's good for the Australian dollar. Later today, unemployment rate in Canada from 5% to 5.1%. Just to tell you, while I was doing the podcast, the forecast was 5% to 5%, if I remember correctly. But the forecast, you're going to see it if you're trading for quite a long time. And if you constantly keep an eye on the calendars, you will find out that in many incidents, the forecast one day is different, and close to the event, it can also be changed. So don't take the forecast for granted. The only thing we have for granted is the previous outcome, because that's a fact. The forecast, it's not a fact, it's an opinion. Okay. Next, premium analytic portal here at Admirals, and the morning briefing will show us the today's top headlines. And here we are. China Kaixing service PMI rises to highest in over 2 years. Bond markets most deeply inverted gauge is pointing to large slowdown in economic growth and deep recession. And just know when they talk about everything is fine, it means we are in a recession. When they talk about recession, it means we are in a depression. It's like that's what apparently appeared in the economic history. Okay, because I like to read about economic history and what things happen and how they can affect the future. So I'm just telling you, I mean, if we are in a recession, I'm not saying we are, I can't say this, but that's my personal opinion. If we are in a recession, the politicians will say, we are doing good. After we go one step further and become worse, then they're going to say, now we are in recession, but we are in the next stage. Okay, the biggest part of the US economy slowed in March. ISM finds a strange mount. US European police shut down hacker marketplace, make 119 arrests. That's a lot. Russian official accused of war crimes against Ukrainian children addresses UN. Total Energies and Iraq agreed to proceed with delayed energy projects. Bayer's new American CEO to study warned pharma giant before acting. Blinken says no doubt Russia has wrongfully detained WS James Eva Grenskovich. Disney names Joe new head of Disney Plus and Hulu. Judge in Fox News defamation trial says he would require Rupert Murdoch to testify. KKR's Envision Healthcare in talks with lenders as it misses earnings deadline. And these are the major events so far. Question here from Wesley. What will be the market do if the employment rate is lower than the previous? Wesley, are you in regarding to the Canadian dollar, right? And that's a good question, really, because it's going to help you understand how to combine this this anticipation of the market news with the current technical analysis. And we'll go through, no problem at all. Let's check the MetaTrader now. Let's start with the with the pound against the US dollar. As the 2-day rule we have in the Forex, due to the high volatility of the market, we say that if for 2 consecutive days the market closes above the broken resistance, then it's a valid break. Yesterday, we didn't see any strong reaction to the upside. To be honest, we saw this inside candle. For aggressive traders, of course, a buy order above this previous, the last high, let's say, and a stop loss can be placed below this low point here. For the if the market is going to break above, then we expected to see a strong breakout. But if the market is going to keep moving lower, then the order won't be filled. And if we want, we can cancel that any moment. But we don't have any reference that the buyers, they got kicked out of positions. The reference we have is that we are in an uptrending market. And as we know, and I told you so many times, the resistance in an uptrend are tend to break, and when we identify the support in a downtrend, not always they're going to hold. Like this support here, it broke. This support here, it broke finally there. So we have to understand that market also pauses and continues and not reverses all the time. Same inside candle with the euro against the US dollar. We could expect, of course, more push to the upside, but if we can see from the character of the market so far, this move, a strong impulse move with this setback, with this pullback, created the next higher high with low volume candles, as we can see from the body of each candle. So what do we expect next? We do expect, we are in an uptrend, all right, and technically and systematically talking, we have moving averages, they are crossed, they are far apart each other. It means it's a strong trend. Any indicator we're going to use, it's going to show us that a trend is in motion here. So we don't have any reference for any reversals. However, of course, approaching resistance, maybe if we're going to use some volume indicators, we can identify some weakness in the volume. If we can use like on balance volume, some more advanced indicators, and like this one here, for example, we can use on balance volume to identify. We can draw trends first on balance volume. We can draw trend lines. We can see the divergence. If we have this trend line here and it's been broken, let's say, that shows that we are not, like, money not flow into the market. The volume is not increased, but it doesn't necessarily mean that we're going to experience reversal. It's a sign though, but because we're going to use a tight stop loss to trade, we need some sort of confirmation. And that's what you guys have to understand when we trade the Forex, the indices, any CFD product, because we put tight stop losses. That's why we need to be more precise with our execution method. Let's just get rid of the OBV. Australian dollar against the US dollar. Although positive news in the Aussie, we see that the market is not quite following with the momentum. Although we do have this trend line, this uptrend line here, and it's intact. It's been tested too many times, and we have the first, second, third, fourth, fifth, and the sixth. So if it's going to come here, it's going to be the seventh time. But really, after a test, we want to see explosion to the upside, like this one here, like this one here. If we see the market come to the trend line and just consolidates without experience buying pressure instantly, the chances are likely to have bullish implications. The Kiwi daily chart, the market yesterday was in a strong intraday uptrend because we broke above this return line and this upward trend line, let's say, and then we have the rejection from the sellers during the New York session, because during the London session it was quite strong. So actually at the close of the 4-hour candle, we saw that this was rejected. Now, if this is bullish, if it's bearish, now if you are trading on a lower time frame and you're going to use, like, if you're trading on 15 minutes, on 5-minute charts, of course you're going to see this as a lower high, lower low. If your reference is the 1-hour chart, you have this penetration of the support. Someone can say that that's a head and shoulder reversal pattern. However, in technical analysis, we're not going to consider this as a head and shoulders reversal, because it requires a significant amount of time to be built. But again, if your reference is the 1 hour chart, for you, this is a significant move. All right. And that's, nobody can argue that that's not a valid reversal pattern. So, and usually when we have the break and we retest instantly, the market has a tendency to just move lower. So in the long term, this is up. In the short term, is down. USD JPY, very mixed here. Of course, the market, from it's based on the moving average crossover, it's still in a downtrend. Remember, if you are trading off the moving average, you have to understand that these are lagging indicators, not leading indicators. They have the tendency to pick up the strong trends, but not the reversals. And that's, if that's okay with the trader, then it's absolutely a magnificent tool to use it. USD Canadian dollar, slowly the trend, the buyers, they make their appearance. We are still in a downtrend. We do expect to see some more weakness here. Now the market, of course, will back to the news, and here is the answer, Wesley. The negative news that can negatively, when I say negative news, I mean negative outcome of the news that can affect, that can weaken the currency, like the Canadian dollar here. If the market is in a strong trend, the news is going to just simply help the price to move higher to resistance, because the trend, the long-term trend, determines the market activity and not a single event announcement. Okay. And guys, remember something else. I've seen many traders getting a bit confused with that one. Excuse me for that, but for a reason I don't see the risk warning here. Just give me 1 second. Guys, just give me 1 second. I will stop share the screen. Where is it now? Here it is. Sorry for that. It's just now we are obligated to have this all the time on. Okay, so I think everything is settled. So back to the chart. Now, Can you check the gold? Could you check the pound Australia dollar D1? Yes, definitely. The DAX, of course, we're going to have a look. Pound Australian dollar, as we commented yesterday, and it's been weeks now, we are in a strong uptrend here. The market in a strong uptrend requires traders' attention to buy. Yep. So we have these higher highs here. We had the dip, as we commented early this week, that on the 4-hour chart, that short-term correction could help to buy this move to the upside. Also, a 4-hour chart with a moving average crossover signals that it's back. The trend is back in motion. Bullish hammer here could be used to enter long. So we are in an uptrend and we are looking to buy and hold. This market has room to move until this level here, 192. So let's keep an eye on that. Gold, you ask for gold. Gold, we went over the $2,000, as you can see here. It's in an uptrend. We don't look to sell the uptrend like this if we are a trend follower traders, but we will definitely keep an eye on this broken resistance. Can act as support now, so we can use it to find some buying opportunities. Do you trade on a daily basis? Yes, of course I trade on a daily basis. Now, I do what I will show you now about the scalping on the DAX. And when there is swing trade, I definitely do. Like the position, I initiated a long position last week on the FTSE. Dow Jones inside candle yesterday. So in an uptrend, this is a strong consolidation pattern. We can see some further upside. And with the Nasdaq, we are in this short-term correction. Market made a higher high here, and we can see some more buying activity. Also with the S&P 500, WTI double inside yesterday. I'm bearish with this one here. All news, they are positive. Everyone is screaming that, yeah, they're going to buy, but I see something technically that is very strong indication, and I'm waiting for this gap to be filled, at least 50% of the gap. Okay, I'm very aggressive with that. MACD, it's very overbought or oversold. What did you say on the daily chart? DAX very overbought on MACD. In which time frame? because here the MACD should show reversal divergence, bearish divergence. So if we go down to the 5-minute chart, we can see that the market, that's it, 5:55. So that's 9 o'clock. So that's our reference. And then a buy stop order for me here at this point. Next resistance, it's intraday resistance, it's this one here. So remember to manage your risk accordingly at these levels. Now, if we're going to get filled here, actually, I think it's too early. I want to wait for 1 more minute because maybe the market, it's going to push higher more. So better to wait a little bit. Weekly. Okay. Yep. Weekly, it makes sense. Yep. To be on an extreme condition. However, just to make a small correction, if you allow me, Rumor, MACD, I think, doesn't have overbought and oversold conditions because it doesn't have the boundaries like the RSI and the stochastic and the percentage Williams and the commodity channel index and all the rest. Okay, you see the reason I didn't left the order because few times I got stopped out just before the market open due to the spike. So now it left 1 minute for the market for the London opening. So I would be okay to put my order there. So a buy stop order here, stop loss, it's going to be below this box for me. Bearish divergence, yes, definitely. Now, if the market, it's going to come all the way to the low here, I'm going to look for a sell, scalping, of course, not anything like sell and hold or buy and hold in this strategy. Okay. If we check the daily chart, of course, yesterday I talked about this double top here, very strong double top in the market, and reversal price action on the daily chart. I told you that I'm going to initiate positions here. Not this account, though. I do all the market, all the trading activity. Okay, just to, because many times when I mention that I hold this trade and I hold that trade, you don't see any lines on the charts, and few people ask me, so just to make sure. Any other questions? Cherry, it is on ASX 200 and hidden divergence on D1 and a regular one on hourly time frame. Is it good for sale? Thank you. Hidden divergence on H1 and regular divergence on 1 hour. Look, check if you are at support or resistance. I mean, if you are at support, you don't want to sell. If you are at resistance, you definitely can consider it. Yep. Let's check it here. We still have few more minutes. So 1 hour, I'll just tell you based on the swings here. 1 hour, yes, it has definitely, it has divergence. I can see the red candles and the green candles. Of course, this trend is getting very weak. On the daily chart, though, look, on the daily chart, though, if you are at a resistance level, you can use the divergence as an early entry. But if you are not at any resistance level on the daily chart, or on the time frame you are looking to sell, then you don't know if the market participant will sell from there. So it's going to help you with your direction. All right, that's how you have to see the indicators. First, we have to check the price. We have to check the levels, the support, the resistance, and then the indicators. FTSE is pushing higher. The order didn't get filled to the upside, so see, maybe the market's going to fall to the downside. If it's going to fall down and it's going to get triggered and it's going to continue, it's going to give us a good trade. I believe if we're going to break below, we're going to come to reach this area of support. I look forward to that. Rumen, anything on the FTSE? Whoa, FTSE is on the go. That's pretty much great. You are very welcome. Crude oil. We talked about the crude. Guys, I would like to make sure that you know about two things. First, about the YouTube channel for the new traders here. Please make sure you like and subscribe on the YouTube channel. And also, we're going to have the market talks. And this month, I will, here at Admirals, we will host and I will interview Richard Friesen. So I will send you the link to participate. We do once a month for limited amount of time, and every time it's a different experience, a professional, famous trader. Few months ago, I interviewed Steve Nissen. This month, it was David Cooling. He talked about volume, and looking forward to the next one. Yeah. So here at the YouTube channel, you can find also educational webinars, recording webinars. Also, we have the Instagram page and the Telegram page. Please make sure you engage with these two. On the Telegram, though, you are able to use the comment section and comment below the live webinar if you want to ask me anything about trading, about any strategy you use or anything related to your trading activity. If you buy, if you sell, you can send screenshots there. I'll be very happy to help you with that. So the market break to the upside on the DAX. Cancel this order here. Let's see if this is going to be a valid breakout and not a false breakout. So my target now, it's going to be the top. That's a resistance area. Remember, if the price is going to come below this this box here, or even below this candle, we can use it as a stop loss area, and we can just scratch the trade. And again, just to answer some questions, I don't use hard stop when I scalp the DAX because I'm going to be here for 5-10 minutes. I don't have any other windows open. I'm fully focused on this and I'm ready to execute. Remember, I'm trading for almost quite good 11 years now. So my mindset allows me to be in front of the screen and just emotionless to open and close trades. I don't have any issue with that. Okay. And all right, that's all from me today. Again, it was a privilege and honor to have you here on this webinar. I wish you happy trading. And again, for those who are going to be here tomorrow, I will also be here. I will see you tomorrow at the same time. Thank you so much. Bye-bye.